Year to date, Nvidia stock has been absolutely crushed. And this is because there's a lot of fear involved in the new tariffs that were placed by the US to China and other countries, as well as the rising tension between the US and China as the two world superpowers. And with this recent price dip, a lot of investors are wondering whether this is the perfect moment to get into the stock. In this video, I'm going to provide you with my analysis of the situation, whether or not you should buy the dip, as well as my price prediction for the stock. There are two factors that will determine whether or not Nvidia will actually get impacted by these tariffs, as well as the geopolitical tensions. So first off, does the company actually get affected by tariffs? Well, the good thing is that for Nvidia, it actually does not make any chips of its own. It actually gets those chips manufactured by the company Taiwan Semiconductor Manufacturing, or otherwise known as TSM. So they have a lot of the manufacturing. Some of it is in the US actually, and more of it is going to go to the US locally. However, a lot of the production is still overseas. Now, recently, Taiwan was hit with a 32% tariff, which that would actually be massive. But here's the caveat. Semiconductors are actually exempt from this tariff rate. This means that the price that Nvidia is paying for its chips today is the same as what it paid last week, which does help to ease some of the fears around the stock. The one thing to keep in mind though is that even though the tariff rate may not apply to Nvidia right now, there's no indication that other tariffs are added that actually affect chip manufacturing. So this is very important to keep in mind. But the other factor that's really critical is whether or not there's an actual reason why demand for Nvidia's products will get affected. As for the company's demand for its products, based on my research, I found that there's no indication that the demand is slowing down anytime soon. And there's many different articles that talk about this, but one of my favorite ones is this one, where it talks about how Google is actually in talks to lease NVIDIA AI chips from CoreWeave. And this is really interesting because, as it says here, it highlights how these companies have such high demand for these different chips to be able to train all these different models that just take up a lot of resources, and they need a lot of computing power. Companies like Google, companies like Meta, companies like Apple are really working very hard right now to dominate the AI space by developing some very innovative solutions to different problems, and also just reducing the existing friction that causes their existing products to not get as much value as they should. And so them continuing to look for this product just means that the demand for the company's products is there, and it only continues to grow. Now, if you look at the past video that I released on Nvidia, you probably already knows that in my opinion, the company is of phenomenal quality, and this is because it has an excellent market, excellent product, and excellent management team. Now, when it comes to the company's financial health, there's not a lot of new reports that have come up ever since I released the video. So you can see the full financial analysis in that video. But for the new quarter, what we did find is that the company keeps performing very, very well. So as you can see, the revenue in Q3 was around 35 billion. In this new quarter, Q4 for the company is now 39 billion. So that is amazing. Margins are still pretty high, and the net income ratio actually improved. Moreover, the balance sheet still looks very healthy for the company, and the free cash flow is looking very strong to weather any kind of external storm that may come for the company. By the way, if you want to know how I got the financials like this, it's very simple. All I did is just add the Y-Sheets extension right here to my Excel spreadsheet, and then from here typed Nvidia. You can see the company shows up, and then I just selected quarterly data, click on get data, and then I got all this information that I can then use for my investments. Guys, this is how we pay the bills, so I would highly appreciate if you could check the tool out to support the channel. Now, if the company has all of these different variables going for it, the question that we need to answer is whether or not the valuation makes sense. Because if this makes sense, then it makes sense to actually buy the dip for the company. So I did a valuation analysis in my past video for the company, but as you can see, I've modified this video just to show how good the valuation is looking right now. So if we have a projected revenue growth rate of 25%, which makes a lot of sense based on the historical performance of the company as well as the future projections, we can have a projected terminal value of 11, which actually makes a lot of sense for a company that has this kind of revenue growth and impact, as well as the quality of the company itself. This actually makes sense. And we take the TTM revenue. Again, this number comes from Y sheets. You can see that in this case, we project the number right here. We apply the terminal or the price to sales ratio for the future to get what the company would sell for. And we actually get a price per share of around $106 per share. And this is, of course, with a discount rate of 11%, which makes sense for today's rates, plus the fact that the company is of great quality. Currently, let's see this. If I refresh this formula from YSheets, I'm going to get the real-time price, which right now it is at $98 per share. So this means that we're potentially looking at an upside downside percentage of 8%. Which, what does this mean in plain English? Well, this means that this could potentially be a great opportunity to buy the dip. Now, there's one thing that you need to consider, and this is the fact that with all these different tariffs, with all these different tensions that are building between countries because of this trade war, the stock might fall down even more. So if you have some money, I wouldn't just like jump into the stock, but I would perhaps allocate a percentage of that money now, and then the rest of the percentage that you have, you can do in increments, maybe like, a week from now or like a month from now, depending on how the price of the stock is moving. Again, just always make sure to do your own research. This is not investment advice. But yeah, in my opinion, this could be a really good opportunity to get into the stock at this particular price, especially because it is of such high quality. And if you look at what other companies in the same space have as their metrics, it actually makes a lot of sense. So here right now we have a P ratio of 35, which of course that is high, but given the growth rate of the company, it makes sense. The price to sales ratio, you can see it's high, but like I said, given the EPS growth and the revenue growth, these numbers actually make sense. If you look at some of the other companies, they may have lower ratios in some aspects, but the revenue growth is significantly less. So if you've been wanting for a good opportunity to get in the stock, this could be it. Let me know what you're doing about Nvidia stock in the comments, and if you've enjoyed this video, make sure to subscribe to the channel, and I'll see you in the next one.